Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm talking to you from the borough of Queens in New York City. It is the 8th day of November, 2022, Election Day in the United States. I do want to thank each of you for listening to the show, making it one of the more popular shows in the Voice America Business Channel. So I'd like to invite you to continue sending along whatever comments you have about this show to questionsfortaylor@gmail.com, questions, the number 4, Taylor, at gmail.com. And as always, we like to thank our sponsors for making this show economically viable. Our sponsors for this week: Irving Resources, Novo Resources, Gold Bull Resources, El Oro Resources, Rena Gold Mining, and Timberline Resources. Today, gold and silver are having one of the best days in many months. Gold has been up over $40 earlier in the day, and silver had been nearly almost 4% higher at one point in time. Both have come off a little bit now. I'm not sure what might be triggering this dramatic rise in the precious metals, but there was an article that I read on Bill Murphy's La Metropole Cafe this morning that may have something to do with it. The article was written by Carlisle Kane of the Equidia letter on November 6th, and it suggests some of the views of people like Jim Rickers and Alistair McLeod, who are frequently on this show, regarding the demise of the U.S. dollars may actually be starting to unfold. I'm not sure that that's true, but there seems to be a hint of that in this article, and here is how the article starts out, the first few lines of it. Last month, China made the world's first cross-border transaction in digital currency. But it wasn't just some sort of crypto Bitcoin retail transaction. It was part of the digital yuan test, simulating direct transactions between China and its partner without dollar-denominated correspondent banking. In fact, after China's successful test, Russia announced it would begin test using the digital ruble and yuan to settle transactions with China. Is this the beginning of a new commodity-backed reserve currency that the largest non-Western countries have already pledged to launch this year? I'll tell you in just a moment. He goes on and with some other ideas in the meantime, but he says, let's look at how far the digital yuan has come and how China plans to use it against the dollar. In 2020, China became the first country to roll out the central bank digital currency domestically. In April, the People's Bank of China launched a beta test for the digital yuan, applied in 4 small cities. Later, the beta app was officially launched for iOS and Android in Chinese app stores. Today, the e-yuan trial program covers 23 cities, including Beijing, Shanghai, and Tianjin. And last month, the People's Bank of China pledged to expand it to Guangdong, Xiyang, and Hebei, and Jin and Jiangsu provinces. These aren't just small random cities. They are 4 whole provinces that make up 350 million people, 1/4 of the Chinese population. After extensive testing, the People's Bank of China also released the full-fledged digital yuan app, letting millions of residents sign up for the digital wallets through multiple state-owned or controlled commercial banks. But by far the most important push comes from the not-so-private sector. Shortly after the news broke, Tencent owned WeChat, China's biggest messaging and payment platform, announced it was rolling out the digital yuan as a payment option. WeChat has a mind-boggling 1.2 billion users, of which 750 million are active daily, which means coming on WeChat will expose China's digital currency to half of its population and bring it closer to mainstream adoption. So it's obvious, the article went on to say, it's obvious that Tencent didn't adopt the e-yuan voluntarily because it directly competes with Alibaba-owned Alipay and Tencent's WeChat Pay, which control 94% of mobile payments in China. It can be easily assumed that the Chinese Communist Party forced it to, which, if anything, signals that China is rushing to roll it out nationwide. If you think that's far-fetched, remember that Alibaba's founder, Jack Ma, disappeared for 3 months after he pledged to revolutionize China's financial system. But the digital yuan's utility goes way beyond its domestic use. As Xi Jinping has suggested, never let a crisis go to waste. He has been long plotting ways to overthrow, that is, to throw over the petrodollar. That is the U.S. dollar, the world's main currency, reserve currency. And the Russia-Ukraine war offered him a once-in-a-lifetime chance to de-dollarize its key trading partner and Europe's fourth largest economy. After the West isolated Russia, China came to its rescue by buying up its embargoed energy. In the first 8 months of 2022, Russia and China traded $117 billion worth of goods, which is 30% more than a year earlier. But China's seemingly altruistic gesture was more of a Trojan horse for the yuan than genuine political support. For one, China's been buying Russian energy at heavily discounted prices because Russia didn't have much of a choice. And then China forced Russia to ditch the dollar and trade oil and coal in their own currencies. Well, that's really the article continues from there, but I think this is enough to give you a flavor of how things are falling into place geopolitically against the dollar, and today's move higher in gold and silver may be just the start of things to come. I'm not sure that that's attached. Today's move could have other reasons. Time will tell. One note I would just make with regard to this article, I'm not sure that it was so much China forcing Russia to de-dollarize as it was the United States when we put sanctions on them and then would not allow them to use various mechanisms for international trade. So in any event, though, the world is changing. There's no doubt about that. And one thing that has always been true throughout history is that gold moves to the countries that are prospering and are growing. It moves away from countries and away from regions of the world that are in decline. And so it's not surprising to see massive amounts of gold flowing to the east from the west. With regard to today's show, I titled it, "Is the Fed Resolute in This Game of Chicken?" Doug Nolan and Michael Oliver return as this week's guests. Since 1971, the Federal Reserve has led America and indirectly the world to the brink of global bankruptcy. It has driven our country to the precipice of disaster, financial disaster, by issuing enormous amounts of money not backed by anything except debt. And to the extent that debt can't be paid, the dollar becomes a worthless instrument and a worthless currency. By contrast, a currency backed by a metal like gold or silver is much more stable because it has intrinsic value based on the metal itself. It is not dependent, its value is not dependent on the ability of others to pay their debts. The currency itself cannot be destroyed when certain companies or individuals become insolvent and are unable to pay their debts, as has been increasingly more frequently taking place in the West, especially in later decades since we went off the gold standard. As hedge fund manager Ray Dalio pointed out, all the Western countries are now at the point where the debt is so large relative to income that the Federal Reserve and other central banks are facing a no-win choice, because to be able to attract savers to buy the government's treasuries, that is to finance the debt, especially with high rates of inflation, interest rates have to rise to levels that will most certainly break the backs of the Western economies. They cannot function at such high interest rates. Of course, the alternative is to keep printing money, much as occurred in the Mississippi bubble, to keep printing money, to keep asset values like stocks and real estate and treasury bonds elevated. But in the process, then, the currency itself is destroyed. Now, that is the path that seems to be the path that Japan is taking right now. So far, the Fed and the European central banks have not opted to print endless amounts of money in what might be considered a game of chicken, because at some point in time, if Chairman Powell at the Fed continues to hold on to the current policy, we most certainly will be headed into a recession, perhaps a very deep one. Then what? What will the Fed and the European banks have to resolve to continue with a tight monetary policy when housing prices collapse, massive numbers of people become unemployed? What will they do then? Will they chicken out? that's the big question, and that's a question that we will be asking Doug Nolan in the second half of today's show, see what his thoughts are. And I think I have an idea what Michael Oliver thinks about that, but he's going to be with me right after our commercial break. We'll ask him, and I'm sure he'll have something to say about today's very, very strong precious metals market.